It was one of the most high-profile airdrops of recent years. The launch of the UNI governance token saw Uniswap users literally given free money. Who the hell needs those stimulus checks, eh? Not only that, but prior to the launch of this token, it was listed on over a dozen exchanges and saw trading volume reach close to 5 billion in a day, trailing only Bitcoin and Ethereum. The price shot up from $1 on release to over $8 within a very short period of time. To say that there was enthusiasm for this token launch is an understatement. Indeed, for those of you who follow my weekly email newsletter, you'll have seen me musing about the possibility and potential for Uniswap listing their own governance token. Well, here we are. However, the most important question is, what potential does UNI have, and should you hodl yours? This video will answer exactly that. Now that the dust has somewhat settled, I'll be taking an in-depth look at the UNI token economics. I'll also marry this with a deep dive on the broader adoption potential of the Uniswap protocol. So, by the end of this video, you will know exactly why UNI is so valuable and why I am so bullish. I'll also be letting you know what I'll be doing with the UNI that I earned in the airdrop, all of which you won't want to miss. Before we dive into these crypto waters, I need to make sure we're all wearing our life vests. Firstly, as is always the case, this is not investment advice. I am no financial advisor, and what I say is purely my own opinion. So, please do your own research before taking the plunge. With that out of the way, I'd like to take the time to welcome anyone new to the channel. Over here at the Bureau, we are your one-stop crypto shop with the latest news, reviews, and token overviews. So, if that is something you could use, then be sure to smash up that subscribe button. Oh yes, and do turn on all those notifications too. That way, you'll be notified the moment a video hits the tube. Crypto markets do move quickly, after all. And finally, you'll notice that I've placed these timestamps right over here in the timeline. Those are there for you folks, so feel free to jump around to different sections should you see fit. Okay, you know what's what? Time for me to show you what's up with Uniswap. I want to start this analysis with a bit of an overview of what Uniswap is, so jump ahead if you're already fully clued up. Uniswap is an automated, market-making, decentralized exchange. Essentially, it's an open-source dApp built on Ethereum that facilitates the exchange of ERC20 assets through global liquidity pools of assets. What's important to note about the Uniswap model is that it differs from other decentralized exchanges that rely on individual order books of bids and asks to manage an exchange. However, at Uniswap, those liquidity pools allow the protocol to create unique markets between any two assets. Sounds pretty awesome, right? Well, it's able to do this through a pretty ingenious protocol design. It uses what is termed the constant product market maker model. Basically, Uniswap is able to provide liquidity by adjusting the price of the order up based on the size relative to the pool of liquidity. Yes, this does mean that there will be significant price slippage. However, the benefit of this is that it ensures that the pool will never run out of liquidity. Despite how complicated this may sound, Uniswap is perhaps one of the simplest DEXs on the market. All that's required in order to access the exchange is a Web 3.0 wallet like a MetaMask. There are two features that users can make use of at Uniswap. They can either use it to exchange two ERC20 assets in exchange for a fee, or they can supply liquidity and earn those trading fees. I don't want to go into functionality too much here. I covered this and much more in my complete Uniswap exchange video, which you can watch right over here. What's even more impressive than the tech behind the protocol is the history of Uniswap itself. It was launched back in 2018 with no ICO. In fact, it was launched with no fundraise at all, neither public nor private. No, you don't need a multi-million-dollar ICO to build a great product. 2018 was a time when the predominant Ethereum DEX on the market was one called EtherDelta. Uniswap's founder, Hayden Adams, thought that the EtherDelta UI looked messy and unintuitive. He wanted to improve on it. Here you can see the official launch tweet by Hayden back in the day. He eagerly announces the release of this weird new DEX to his 200-odd Twitter followers. And here you can see the early user interface of Uniswap. Quite different from the one that we're used to today, but still a massive improvement on the UI over at EtherDelta. So, Uniswap was launched without much funding and no fanfare. It was only backed by an idea and a community. A community of Ethereum users who did not want to have to resort to a centralized exchange in order to change their assets. Fast forward to 2020, and this is when things really took off for Uniswap. This was, of course, the year of decentralized finance. The year when users were introduced to concepts like yield farming, liquidity mining, synthetic derivatives, the whole shebang. You only need to take a look at the growth in total value locked, TVL, over at DeFi Pulse to get a sense of just how much this space has grown this year. Right in the middle of this was, of course, Uniswap, the go-to automated DEX with the most liquidity and trading pools. Yes, there were a lot of other competing DEX protocols, but none really managed to dethrone Uniswap. In March of this year, they released their much improved Uniswap version 2.0. There were a number of improvements that were made to the protocol that not only increased functionality, flash swaps, but also made it more secure, more robust Oracle design. As the DeFi craze picked up, Uniswap was there, lapping up that excess liquidity and watching its TVL climb. Uniswap was not only generating interest from us crypto users, but there were also a number of venture capital funds that took notice too. In August of this year, Uniswap completed a Series A funding round and raised a total of $11 million. This was from some of the most prestigious VC firms on the tech scene, including Andreessen Horowitz, Union Square Ventures, Paradigm, and many others. A huge vote of confidence, in my opinion. So, all seemed to be going well. By the 4th of September, Uniswap had the most dollars locked in it than ever before, at over 1.8 billion. But then, as if out of nowhere, came this massive drop in TVL. This continued all the way to the 9th of September, where TVL stood at just over $400 million. So, what the hell happened? Well, it's actually fishy. And I mean that quite literally. Allow me to explain. SushiSwap is a fork of Uniswap that was launched at the end of August. The main MO of this fork was that they would be a community-governed AMM with their own unique governance token. This was called Sushi, and users could earn it by staking their Uniswap liquidity pool tokens. The exact term for this tactic is vampire mining, and it's not really cool. Copy someone's code, change the UI, throw in a governance token and liquidity incentives, and then harvest all of Uniswap's liquidity. Of course, this had the desired effect. It meant that many liquidity providers moved over their LP tokens in order to earn some of that sushi. In some cases, over 90% of the liquidity of some pools was moved over to SushiSwap. Of course, for anyone who has followed SushiSwap, you will have known that sushi came with a bit of food poisoning. If you don't know the whole saga, then I cover it in depth and much more in my complete SushiSwap overview, and you can watch that right over here. Bang! So, SushiSwap was vampire mining that liquidity from Uniswap. This was further precipitated by the liquidity migration that saw SushiSwap convert LP tokens into actual liquidity. It was at this moment that I thought to myself, Uniswap has to provide liquidity incentives. Great tech is one thing, but unless they have their own unique rewards, other protocols will continually leech off of its liquidity. And this then culminated with that announcement on the 16th of September that they would be launching their UNI governance token. And to say that this was a game changer is an understatement. At Genesis, 1 billion tokens were minted on UNI launch. A full 60% of these were to be allocated to the community over a period of 4 years. You can see the rest of the breakdown over here as it's split according to team and investors. That's of course not what captured the attention of most of the crypto markets. It was the announcement that a full 25% of this community allocation, 15% of the total, was to be airdropped to those past users of the protocol. For anyone who used Uniswap prior to the 1st of September, they would be airdropped 400 UNI. Furthermore, anyone who supplied historical liquidity was also airdropped a pro rata share based on the time and amount of liquidity that was provided. I was lucky in the sense that I had a number of MetaMask accounts I had used on Uniswap that were all airdropped 400 UNI. I was also airdropped additional UNI for historical liquidity that I'd provided. What's even more surprising than the tokens, though, was the speed with which they were listed on the exchanges. Within a few short hours after launch, they were listed on both Coinbase Pro and Coinbase. Although I'm sure they will have been in talks prior to the launch. Of course, Binance, not one to be left behind, also listed UNI out of the gates. This led to a flood of interest in UNI and saw the tokens shoot up from $1 to over $8 in the span of only 72 hours. Pretty insane. So, why did the price rally so much? Was it merely FOMO, or is there real value behind UNI? Well, the only way to determine that is to take a deeper look into the tokenomics. So, let's do that, shall we? As mentioned, there were 1 billion UNI minted in the Genesis block. However, only about 15% of that was immediately available on release. The rest will have to be earned by people in the community through supplying liquidity, contributor grants, community initiatives, etc. So, if you hold UNI right now, you're already in a much more favourable position than your mate that doesn't. The only way that they can get their hands on it is either by buying it on the open market or by providing liquidity. When it comes to the latter, Uniswap has designated 4 pools in which you'll be able to earn those UNI tokens. These are the following: ETH USDT, ETH USDC, ETH DAI, and ETH wrapped Bitcoin. This liquidity incentive scheme was launched on the 18th of September and will run for 2 months. In total, there will be 5 million UNI that will be distributed in these. This will be just above 83,000 UNI per day per pool. Now, you can of course join these pools, supply liquidity, and earn those tokens. If you wanted to do that, then my Uniswap video will show you just how to. However, don't expect a huge payday on those UNI tokens. You see, the amount of UNI that's distributed is based on your pro rata share of the liquidity pool. I ran the numbers. Let's assume you target the pool which has the least volume at the time of this video. That would be the ETH DAI pool. There's currently just north of $300 million in liquidity over here. Let's assume, for the sake of this analysis, that this pool size remains relatively constant over this time period. This means that in order to earn those 400 UNI that were airdropped to you in a day, you would need to supply $1.4 million to the pool. If you wanted to earn 400 UNI over the entire 2 months which this is live, you would have to supply about $25,000 in liquidity. So, if you have a spare 25k in crypto lying around and you have 2 months to wait, then you can earn that UNI through providing that liquidity. However, I suspect that many won't want to do that. This clearly illustrates 2 things for me. Firstly, those who are lucky enough to have had it airdropped to them are in a much better position than anyone who wanted to start earning it through supplying liquidity right now. Yes, LPs can earn trading fees, but these are often nowhere near as valuable as the liquidity incentive. And secondly, it means that people would be far more willing to pick up UNI on the open market through the exchanges. It's a lot easier and does not require putting a lot of capital up to the risk of impermanent loss. Your average Coinbase user just wants to buy his UNI right there. He or she is not experienced enough to crack open that MetaMask and supply almost 25 grand in liquidity in order to earn those elusive UNI tokens. So, this shows why there could be a lot of demand for UNI tokens on the market. They're relatively hard to get for your average crypto user, and hence they are likely to bid up the price on the open markets. Okay, so that is the short-term dynamics and tokenomics. But I'm not only interested in the short term. I'm interested in the long-term potential of Uniswap and UNI. Let's pull up that supply schedule, shall we? As you can see, over the next 4 years, tokens will be released to the different members of the Uniswap ecosystem: the team, community, investors, and advisors. That remaining 43% that's not been airdropped to the community members will be distributed through a number of initiatives that increase the value of Uniswap. These include those LP incentives I mentioned, as well as contributor grants and community initiatives. This is great, because unlike other projects that have just issued their tokens in an ICO and left users to their own devices, Uniswap wants to encourage participation. It wants users to help shore up that liquidity and have a say in the direction of the protocol. And this last one is an important one. This is the governance component. It is, after all, a governance token. As is the case with other governance tokens like Compound Finance's COMP, Yearn Finance's Wi-Fi, or Curve's CRV, holders of these tokens will be able to eventually vote on all things Uniswap. One of the most interesting of these will no doubt be how some of those Uniswap treasury funds are spent. You can decide on which projects to back, which pools will get liquidity, incentives, what fees should be going to the liquidity providers. All of these are fundamental to shaping the direction of the project. And for those groups of users that have a certain quantity of the UNI supply, they can submit their own proposals. You can see the governance parameters right over here. Now, this whole governance shtick is also important as it relates to the token price. One will assume that those who vote on proposals will choose those that are more likely to increase the reach of Uniswap and hence the value of the ecosystem. They will vote according to their economic interest. For example, and this is totally just me hypothesizing here, UNI holders could vote to pay out some of the liquidity provider fees to those staking UNI, more UNI for those holding it. This is actually something that SushiSwap did with their token. So, yes, governance tokens have value. Think about preference shares at companies that have certain voting rights. There is a reason that they will trade at a premium to your common share. Okay, so let me crack out my crystal ball and fast forward 4 years into the future. Uniswap is the predominant DEX on the market. They have scaled to thousands of transactions per second as a result of Layer 2 solutions as well as that much-touted Ethereum 2.0 release. There are thousands of pairs that can be traded and, thanks to interoperability protocols and bridges, expanded to other ecosystems. This is also the time that final UNI from the Genesis block has been issued to those in the community. It's all now on the open market. And this then brings me on to an important point. 1 billion is not the max supply. After 4 years, there will be a constant protocol inflation of 2%. This helps to ensure that those who participate in Uniswap's governance will be rewarded over those that do not. Those that merely hodl UNI hoping for gains will slowly face inflation of 2% every year. However, if you stake UNI to vote or you supply it liquidity, etc., then you will get a share of that protocol inflation and grow with the ecosystem. I think this is a great economic model. It creates an incentive for UNI community members to collectively work to grow Uniswap. And, as mentioned, a more successful Uniswap means a more valuable token. Okay, so it's quite clear that I am a UNI bull. But are there any potential risks that lie in wait? Well, there is one that I can think of, and that's how the regulators will view it. Yep, that old security chestnut. The SEC's favourite trump card against anything in the crypto space. It wasn't long after the airdrop of UNI that people began to muse about the legal implications of the token. There is precedent in the DEX space, actually. Remember that Ether Delta exchange that I mentioned in the beginning? Well, they were actually brought down by the SEC. This was on the charge of running an exchange that sold those dreaded unregistered securities that they take such issue with. In fact, the lawyer who represented EtherDelta was recently asked for comment about those UNI tokens. He told news publication The Block, quote, "The biggest question is when, not whether, the SEC and other regulators or law enforcement are going to say/do something about this." So, that's the opinion of the lawyer who worked on a similar case. I encourage you to read the post, linked to below, as there were other opinions. Some contend that UNI as an airdrop could have been considered a security offering. Of course, whether UNI is a security or not is really down to the interpretation of the law. Does it pass that well-known Howey test, which is used to determine eligibility? Hard to tell. However, let's not forget that Uniswap is backed by some of the largest and most well-known VCs in the space. They will also have received tokens in the airdrop. Now, I somehow think that they would have done their legal due diligence on this beforehand. I'm pretty sure that some of this lot have a line into the SEC, or at least a team or two of high-powered lawyers. In my view, though, I don't think UNI is a security. However, I'm less of a lawyer than I am a financial advisor, and, as we know, I'm not one of those. Time to wrap up this video with some of my personal thoughts on UNI. Firstly, for those of you who've been following the channel for some time, you'll know that I am a fan of Uniswap. It was one of the first automated market-making dexes that I used, and it still remains one of my top ones. Having the ability to not only easily swap tokens, but also earn returns from supplying liquidity was particularly alluring to me. Moreover, the fact that Uniswap was able to build such an amazing DEX without completing an ICO was particularly noteworthy in my opinion. It further endeared it to me. However, markets do change and code can be forked. There were many that were wondering how long Uniswap could compete against projects that offered these unique LP incentives. The SushiSwap vampire mining episode was no doubt one of the most illuminating examples of this. So, of course, I was incredibly excited by the launch of the UNI token. Apart from the fact that it was free crypto, I have the view that it was incredibly valuable. As shown, you have favourable tokenomics coupled with large demand for protocol governance. This all adds up to the value proposition of UNI. Of course, there is that security classification risk. But this is a risk that I've weighed up against the probability of any enforcement action. This is crypto after all, and in many cases, laws from the 1930s just can't be applied to a 21st century decentralized technology. So when it comes to my personal UNI stack, I'm going to be holding it. I will also be supplying some liquidity to the ETH DAI pool in order to earn a bit more of that UNI that will be dispersed. I will of course monitor my ETH position to make sure I'm not hit too hard by the impermanent loss. And of course, I will let you folks know in my weekly email if I make changes to this. And if you're wondering what the hell that is, well, you're in for a treat. It's basically one email every week that summarizes and crystallizes everything that's on my mind. Crypto, of course. I also share a breakdown of my personal crypto portfolio. So, if you want to hop aboard that rocket ship of crypto knowledge, there is a link to my sign-up form below. And that is it, my fellow crypto fans. My review and overview of the UNI token. But there's one thing that I really need to know right now. What do you good people think? Is there anyone else holding on to their UNI? Fire your comments below. Oh, and while you're down there, you may want to take a peek into my personal deals page. It's over here that I have some of the best deals and promos in the crypto space, exclusively for viewers of this channel. So, do check it out. And finally, thank you so much for watching. You folks rock, and it's a pleasure making these videos for you. Please help me to help you by smashing up those likes. And also, don't forget to subscribe. The next few videos are some you definitely don't want to miss.